This is Felix. He owns a small delivery business, and he needs a new van to grow. The van costs $20,000. Felix is proud and disciplined. He hates the idea of debt. He decides he will not buy the van until he can pay for it in full with his own cash. For 1 year, Felix works overtime. He skips holidays and saves every cent. He finally reaches his goal. He walks into the dealership, hands over a briefcase of cash, and drives away. Felix feels smart. He owns the van outright. No interest, no monthly payments. Right? Meet Julian. Julian is a banker. He looks at Felix's smart move and sees a massive hidden cost. Julian realizes that to have $20,000 in cash, Felix actually had to earn over $25,600. The government took a 22% cut in income tax before Felix ever saw a dime. For every 5 hours Felix worked, more than 1 hour belonged to the taxman. Felix didn't just pay $20,000 for the van. He paid over $25,600 worth of his life and labor. Now look at the alternative. If Felix had taken a 5-year loan at 5% interest, the total interest paid would be around $2,645. Felix chose to lose over $5,600 to taxes and 1 year of growth just to avoid paying $2,645 to a bank. By saving money, he chose the most expensive capital on earth, his own after-tax salary. We see this mistake in personal finance and big business alike. People fear a 5% interest rate while ignoring the 22% tax friction on their own cash. Imagine a company that refuses to borrow money to build a new factory. They spend 5 years saving up their profits. By the time they have the cash, their competitors who used loans to build immediately have already taken the entire market. They didn't avoid a cost. They paid for it with their future. The cost of capital. Your own money isn't free. Between income tax and the time it takes to earn it, after-tax salary is often the most expensive way to fund a project. Debt as a tool. A loan is a way to buy time. If the interest rate is lower than your tax rate or your potential profit, the loan is the cheaper option. The friction of tax. Every dollar you earn has a price tag attached by the government. Sometimes it is cheaper to rent the bank's money than to buy your own back from the taxman. Hopefully you learned something new today. If you want to master financial concepts through stories that actually make sense, don't forget to subscribe. See you in the next story.